Okay, we should be live and good to go. Good evening, everybody. Hope you had a nice weekend. Let me know if you can hear me properly, see my screen. Just got out the shower, so have to set up my mic properly. A bit rushed, but you know how it is. How's everyone doing? Let me just move everything around appropriately. Ba-ba-ba. How was your weekend? Yeah, I'm doing alright, thank you. Doing alright. All good, awesome. Good to hear. I'm often relaxed for these. I've been doing this for long enough not to get stressed. Я, блядь, тебя обожаю. Ну, Иван, спасибо. Блядь, не знаю, конечно, что ты имеешь в виду, но... Так понимаю, что комплимент. Oh, my internet's been back for a while now. But that was certainly an annoying period of time. Okay, chat is working. Everything's good to go. Let's get rolling. Have you studied Russian? I grew up in Moscow. Russian is my first language. English is second. So, first things first. Thank you to Bybit for sponsoring Technical Roundup. If you'd like to support the stream, be sure to visit their link in the description below. They've got a Christmas-themed competition going on at the moment. Not a team-based one, more of an individual-based one. So if that sounds like your cup of tea, to degen it up, it's live right now. Sign-ups are still available, as far as I know. And some of the aggressive traders, so to speak, are already up 1,000%. So some stuff to look at there. Thank you to Bybit for helping us out and for making this possible. Again, the Christmas Jingle Brawl, I think it's called, can be found in the description below. Second of all, thank you for being here. Make sure to like the video if you haven't already. We always do better than Donald on the likes, so let's keep that going. And the channel, of course, subscribe if you haven't already. Good growth and lots of good content planned for the new year and in time for Christmas as well. On the note of content, before we jump into the market side of things, I've delayed the market structure video. I just quite simply haven't gotten around to finishing it. It's just one of those things, you know. I've been doing these videos for 3 years. I just need to be in a certain frame of mind to sit down and do it. It's not a kind of, okay, I'll do, you know, a third of it today, then a third of it the next day, etc. It's more of a sit down, one and done type of deal. And if I'm not feeling it, then, you know, these videos are important. People still view them years later, which is a great privilege. But as a result, I need to be sure that it's good, especially when it comes to something like market structure. So I haven't had that, not inspiration, but, you know, that drive to finish the video, frankly. But I will aim to do so in the coming week, or this week, so to speak. On top of that, we're actually going to have a new video on this channel as well with Donald, which is going to be all about hedging. So this is something that's, I mean, it's not recent for crypto Twitter per se, but nowadays if you go on there, and you'll read about I hedged this and I hedged this bounce, and everyone talking about being net long Bitcoin and what all of that means. We're going to have a video on basically the basics of hedging, what it means, how to do it, where to do it, and some considerations. It's one of those things, I think, that's important to know how to do, even in a strong trend, but a lot of the time people might be quite, and this is fine, just too shy to ask, and don't want to seem out of place, being like, okay, what do you mean when you hedge, or how do you hedge, which is totally normal. So we are going to explain that, hopefully within 10 minutes. Donald sucks, Cred's the best, tell him Cred, absolutely not. Donald's the fucking best. Get out of here, man. Не пизди. Hedging equals protecting one's ego on Twitter. I mean, yeah, there's that element of it, of, oh, I'm hedged and, you know, I'm fine, whatever happens type of deal. But it is a very useful tool to have, given the amount of spot exposure most of us / all of us have for this market. It's just another tool in the toolbox that's worth being aware of, and that's something we want to cover in the channel. So yes, Andrew, I kind of share your cynicism that, you know, oh, I'm hedged, etc., often coming after the fact, but in, you know, its actual original purpose is a way to protect your net long exposure or mitigate the risk of downside given one's net long exposure. So, you know, it is very useful. I understand it's misused, so perhaps all the more reason to do that type of video. Cred, where can I appeal your Twitter ban? I'm not sure what you mean. Dark Practicals, Cred Theory. Gosh. I didn't know where all these comparisons are coming from, but, you know, the good thing is you've got me on Mondays, Duck on Wednesdays, and then Friday is a toss-up, so if you don't want to watch someone, the scheduling is pretty straightforward. Okay, so let's talk about, we'll start with Bitcoin, ETH, and then visit some of the others. I also want to add some of your requests into the technical roundup watch list, so to speak. So we'll look at some of the charts that you guys want to look at and see if any of them make it, so to speak, to the watch list. Yes, the market structure video this week, maybe. So, like, it's being worked on, right? This is as far as I got with regard to identifying breaks in market structure, and I just couldn't really go any further. So you can see you got identifying breaks in market structure, all this stuff, then trading them, and then some nuances. So, yeah, this is like a job for one sitting. It's just I haven't literally gotten around to doing it yet. And then we've also got the outline for the hedging video as well. That should come out this week as well. So, you know, there's good stuff. No point rushing it anyway. But it exists, you know, we're not just making stuff up. Right. Let's go back to where we were. So Bitcoin, I think the weekly and the... I'm not using Elliott Waves, Adeline. I don't know anything about them. Aside from the fact that I don't use them. So the weekly time frame, this was a really interesting weekly close. I caught some portion of it. I tweeted out the trade that I took with my entry and exit, which was kind of okay. I'm happy to discuss that trade in slightly more detail. But overall, in terms of weekly structure, not much has changed. I mean, resistance has held and support has held as well. I don't know where Lightshot decided to go. Very rude. So in terms of structure holding, and that's sort of been the... I mean, I don't want to say ranging too much because there have been some great intraday and even daily time frame moves to be played, but in the grand scheme of things, nothing's been broken, I suppose is the most useful way of expressing that. We have the highest close level... Oh my gosh, Lightshot does not want to work with me. We have the highest close level of resistance here on the weekly, which is pretty much holding, right? I mean, that hasn't gone anywhere. Still acting as resistance. And then the nearest level of support that we pointed out and we had on our daily chart is the last weekly lowest close before the all-time high spike. Okay, and that level came out here. If we just draw it, and just looking at these past few weekly candles, again, when I say everything's intact, resistance held on a weekly closing basis and support held on a weekly closing basis as well. Nothing crazy there. In terms of other weekly structure to be aware of, as per last live stream, I still think 16k isn't a reasonable level, especially given how hastily we tested it or didn't. I think this, the low of this week didn't fully test the level on most data feeds. And then if we're getting into real high time frame, monthly type of pullback territory, the next weekly level lands at around 14k, which is that monthly highest close. So nothing too crowded, right? Resistance near all-time high level at, 19k odd, right? We'll see exactly where that level is in a moment. That's the nearest resistance. Nearest support, not the most beautiful level in the world, but, you know, in a strong trend, it doesn't have to pull back to the mega good levels. Doing its job so far. The weekly lowest close, and then the big boys, if one of these levels breaks, and I could do it in blue, right? So we can say what's immediate support resistance, and then where's the market likely to reach for if it breaks. So we've got immediate support, blue, immediate resistance, blue as well. And then if we get a weekly range breakout or expansion of some sort, because again, both structures are intact at the time of recording, I'd say the first trouble area in terms of support below market is more or less 16k, and on the upside, I mean, it's anyone's guess. All-time high break, and I'm not a huge fan of projecting where, why, or whatever that might go. I think obviously because we have historic levels or prior levels to reference on the support side, those we can be more reasonable. As for an upside weekly range expansion, anyone's guess, right? So that's kind of where we are at the moment. Wait, what's going on? Oh dear, 14k views. I'm not sure where that's coming from, to be completely honest. Yeah, that's strange. That doesn't look correct. Well, yeah, I'm seeing it as well. It's probably just a bug of some sort, or someone trying to fuck with the channel. Yeah, that's not nice. Nonetheless, let's continue. So that's the weekly time frame. We have that context. Daily's still kind of been choppy, but you can see that dips are being bought, right? And that's sort of where the title of the stream comes in to some extent. And last time we talked about the confluence of levels at 18.3 to 18.2. Right, and where did those come from? Again, nothing new. We're just transplanting those high time frame levels on the lower time frame chart. That weekly lowest close came in at 18.2, and then the daily level, which is the lower boundary of this kind of pivot here at this point, came out at 18.3. So the punt that I took, I suppose my most recent high time frame oriented trade, which broke a bit of a losing streak, was buying the lower boundary of this level. The entry price and stuff is on Twitter. I think it's 18,190 or something. And then I exited quite early on the retest of the first trouble area as price came into these prior lows essentially here, right? So on this candle. Now, the general high time frame idea was to get involved at the weekly level, and then because we're dealing with high time frames, to get out at the next kind of weekly level, which would be all the way up here. Instead, I got out early, right, on this pump. And the reason was because, again, my initial entry was nearer the structure itself, and then price started nuking. I did something which technically my system allows for, but again, the lines get kind of blurred in terms of discretion. I more or less doubled down and averaged in on a losing position near the lows, right? So I saw another sell-off, which to me just seemed unreasonable, accelerated, or at least likely to be the weekly wick. So quite literally added to that position to average a better entry, and then got out on a much more conservative trouble area based on the intraday time frame. Okay, not something I recommend, but again, I think setting expectations is quite important. So for example, if you have a hourly level, right, let's say this is hourly structure on the hourly time frame, for example, and you see a big candle which just completely smashes your level, closing through it, the chances of, assuming there's no other high time frame reason to believe the support's going to hold, etc., the probability of you being correct of buying support at this level when, let's say, the candle close looks like this, it doesn't look favorable, right? If anything, the working assumption should be that you were supposed to buy support, close below it, and then any retests will be retests of resistance and perhaps an opportunity to exit the position at a smaller loss than anticipated, and so on and so forth, right? I have nothing, I don't disagree with that framework. In this instance, the only reason I could somehow half justify, at least in my mind, adding to a loser, which is not something I recommend typically, is, again, this isn't just a level that's on the hourly time frame, this is the weekly lowest close, right? So it's weekly structure. And as we've discussed previously, when dealing with high time frame structure, we have to be a bit more permissive in terms of wicks and how much we can expect the level to get violated before offering a close that's ultimately positive or reasonable, right? So basically, as we've seen, especially from the monthly time frame and the weeklies as well, the bigger the time frame, the less precise the reactions off the level going to be, or maybe before ultimately closing in a way that could be expected, right? That was really clumsily expressed, but you just have to give these high time frame levels more space. Like we saw the monthly retest of 10.7, that went all the way down to 9.6 and 12k before it ultimately played out, right? So pretty big swings, and that kind of works on all time frames. So monthly, we can expect big wicks. Weekly, still big wicks, but smaller. Daily, smaller, etc., etc. So you know, it kind of scales. I don't want to say linearly, but basically, the lower the time frame, the less room price has to violate structure before you think, right, this level's properly screwed, right? Or to use a practical example, let's say you're trading an hourly structure, and you get a close 2-3% below it, right? You're probably thinking, okay, well, that structure's fucked and the idea is probably wrong. And at that point, you know, holding an hourly level to the standard of, you know, holding within 2-3%, whatever, is pretty reasonable. But then if we go to the higher time frames, do I expect that degree of accuracy from high time frame levels? Not really, right? I'm willing to give it a bit more space. So it's only for that type of loose reasoning that I was comfortable adding at the lows, despite being offside. And the price to pay for that, of course, was more conservative trade management, right? So instead of getting out where the technical first trouble area was at the all-time high weekly close, because I was essentially oversized and doubled down into a loser, I was getting out at intraday first trouble area to mitigate risk in that way. So there's a kind of trade management lesson to some extent there as well. It may seem comfortable and convenient, and you can always find a reason to average in a loser, but the hidden cost may be that you end up managing the trade more aggressively despite the original idea being valid in the first place, right? Does that make sense to anyone at all, what I just said there? Like, it's very unlikely that if you add to a loser or oversize or double down or do whatever you want to, you know, I suppose manage the trade in a very aggressive, from a position of weakness. I suppose that's the best way to describe it. Managing a trade or changing one's position from a position of weakness relatively rather than strength will likely lead to, I suppose, less reasonable trade management decisions. At least it did for me, right? If I just stayed at my entry here, right, near the lower boundary, and I just got the easy ride, there's a good chance I would have held it here. But because I doubled down near the lows, I was almost looking for an exit as opposed to just taking the trade from A to B. But that's trading for you, right? I did miss another entry signal, which is totally valid. Under my system, at least, which was based around this grey box here that I've added. And this is kind of one of those market structure things that I will explain in the video, which is cool, right? But as you'll recall, it's the basic idea that high that leads to lower low should be good resistance. If price breaks that high, making higher high, that's bullish, because good resistance failed, right? High that leads to lower low should be good resistance. If price breaks that high, thus making a higher high, that's bullish because what should have been a good level of resistance failed. So the basic, I suppose, diagram version of that is you have a low, you have a high. This high preceded a lower low, right? So you've got low, you've got lower low, and then the market comes up and breaks the high which preceded a lower low, thus making a higher high. That's typically a bullish pattern, right? Because again, it's evidence of reversal in market structure. Low, high, lower low. If market structure is bearish, what do we expect? We expect a lower high somewhere in this region, right? And if that fails, well, holy shit, now you have participants trapped below the old low, right? Or at least new selling interest likely on this breakdown, but then they found no reprieve and have been getting squeezed on this whole rally up. Okay, so whenever you get this type of structure, that's your kind of bread and butter evidence of market structure reversal. And that high, which led to a lower low and should have offered a lower high but didn't, then acts as support, right? And that's kind of this pattern here. And I literally remember looking at this candle thinking, I'm allowed to buy this, but for no good reason. You know, sometimes I have really good reasoning for things I do in my trading, like what I just explained in this trade management. Sometimes I'm just literally staring at the chart and I don't take the trade. Look, it's something to work on, right? These are my own personal vices. But that's kind of the pattern at stake here, right? We have this leg up, and bear in mind you've got looking at market structure, right? You've got this leg up, lower low, right? Because this low here is lower than the preceding swing low, regardless of whether you look at this one or this one, right? You've got a break in structure, boom, boom, lower low here, and then we kind of trace it backwards. Okay, we've got a lower low. That should be bearish. Where did the lower low come from, right? Or where is this upswing or the shift? You know, where'd the shift come from? Well, we look at the last leg up, which preceded it, right? It's kind of based on time, whatever. And then that should then act as resistance. And again, this is combining concept. Is it a range high that leads to a break in market structure? Is this a supply zone that gets engulfed? Is it a breaker? Is it a support resistance flip? The point is, it doesn't fucking matter. It's all the same thing. And you'll discover, or maybe you have already, that a lot of the price action concepts that you read or get taught, etc., necessarily, because they're all looking at the same stuff, candlestick charts, they rely on the same concepts and the same structures. They differ in the nuances, differ in the labeling, but for the most part, it's very much a shared playbook, right? So whether you view it from a market structure point of view, range point of view, support resistance point of view, supply demand point of view, order block, pivot, whatever point of view, it doesn't really matter. It's the pattern that we discussed that matters in itself. So again, upswing or consolidation or cluster, lower low should be resistance, isn't, makes a higher high, and its upper boundary gets retested, and we trade higher, right? So this is the only other thing that was notable during the week. I missed it, tough tits, and then since that point, the market has reached the high time frame resistance that we discussed all the way back on the weekly. So where are we right now? We're at a level of resistance that I'm not keen to sell. Not the way it's looking right now anyway. I just don't see anything attractive here. Potentially some sort of double close may be reasonable, right? A breakout that gets stuffed completely. And again, this is all context dependent, right? You get a breakout through these highs as well. That gets sold into, right? Some sort of engulfing structure, whatever, just as an example. Close above it, above local structure and the last upswing. Then get a break in market structure. Sorry, not a break in market structure. Close above, close below the level. That might be reasonable for a kind of A to B play and a continuation of this range that we delineated from the weekly. But up here, as price looks right now, I don't have any strong views. In terms of directional bias, I really hate doing stuff like this because it oversimplifies the trading process. But purely from a technical high time frame, whatever point of view, we know the all-time high close is a weekly level of resistance. So I think daily strength, at least through this level, would be generally positive. Surprise, surprise. If it goes up, it'll go higher. Fantastic content. Towards at least the monthly open. And then, you know, we've got the all-time high in our scope at this point. But that's kind of the only reasonable level of resistance that I think is still present on the chart. As for, oh my god, help me, I'm locked out and I want to buy a pullback, I still think this consolidation, market structure, whatever type of thing, is still reasonable for a dip buy type of outcome, especially because the upper boundary has been tested, the low boundary remains untested, so I think until proven otherwise, I'll treat this as a range. Resistance 19.3, support same levels as last week, 18.3, 18.2. A lot of the time when you have this kind of sloppier price action and then a clear break away from the level, when it comes back, that second test is a lot cleaner than the mess that preceded it. So on the momentum continuation side, above 19.3, I mean something like this, but this is crap. It never really happens that way. But purely in terms of directionality, Daily strength through 19.3, 19.4 towards the monthly open. I think that'll be it. We should see the kind of resolution of this range more generally. If we dip again, I'd want to see the same levels as last week hold for at least a range low to range high play, if not a range low into a continuation play higher. For anyone asking for a bearish case, again, everything is predicated on the weekly time frame. Where did we bounce? We bounced from weekly structure coming in at 18.2 or thereabouts, and there's a lot of space until the next structure at 16.1. So if that for some reason fails, and it shouldn't, if the market's bullish, because again, we've had the lower low, we've had the market structure, reversal pattern, all that good stuff, so it shouldn't fail. But if it does, below 18.2, I bought the dip the first time. I'm probably going to punt the second time again if it sets up appropriately. But if that fails, I'm happy to play both sides of the market from 18.2 towards 16.1, and specifically this weekly low here, sub 16k. Okay? I suppose the simple version, I think the easiest trades or the easier trades have more or less played out so far within this range. Resistance at 19.3, support 18.3 to 18.2. Okay, and given the high time frame trend, etc., etc., I'd prefer to be a buyer of support rather than a seller of resistance, but I will take what the market gives if and when appropriate. Does that make sense so far? Was that helpful? Does the market structure, pattern, whatever we talked about, was that somewhat comprehensible? Okay, great. Cred, if you were a no-coiner, would you buy yourself Bitcoin right now at this price, or would you wait lower? Look, those are always really difficult questions to answer. It depends on your risk appetite, on your mandate, etc., etc. Whether you're going to trade it and all sorts of things. I'm just not comfortable giving that sort of advice. If your time horizon is like reasonably long, then just getting some exposure and forgetting about it, even if it dips whatever 20-30%. Shouldn't be a real issue if you subscribe to the high time frame trend that we appear to be forming at the precipice of new highs, right? So I don't think there's ever a perfect time to enter a market, especially if you have no exposure whatsoever. Something I learned the hard way on a lot of this rally is cheap and expensive are of limited use, at least in a strong trend. So it kind of depends on you, man. You didn't say definitely? Yeah, I'm rarely going to say definitely. Okay, cool. Dimitri says, your videos for a while have been all about levels. No more love for each Mocha class. They're proven to be less useful. I'm sure they're still useful. Especially in strongly trending instruments. I think this most recent low came in, I think this was the daily Kijun, right? So Cloud is still fine. It's just not something that currently plays a role in my system and hasn't for some time. I don't think there's anything wrong with it. I didn't abandon it because I discovered the hidden evil truth about Ichimoku, whatever, anything like that. It just gradually got phased out of my system. How much does Bybit pay you? $1 for every like. So please, support us. Hit that like button. So yeah, that's Bitcoin, more or less. ETH. Slightly less straightforward than Bitcoin, just in terms of where it is up here. I'm not terribly fond of this area. Again, I've got a lot of good arguments to make for pullbacks closer to 470. Sorry, good technical arguments closer to 470, 450, and closer to 700. Up here, I'm kind of starved for good levels, and more or less having to focus on lower time frame, what have you. I've seen this level come up over and over again, both in discussion, Twitter, etc. I'm not hugely fond of it for reasons that we've covered previously. Again, whenever I look at these consolidations that form between impulsive legs, I like them to be significant, right? So the consolidation in the second leg that takes place to either make a lower low or break support or do something big, right? Whereas in this case, it was just kind of a 1 week range, went down, and that in itself was a higher low until then we had the breakdown, right? So I'm not terribly fond of this level, and this isn't an area that holds a lot of technical significance for me, so the daily time frame is going to be more bread and butter-ish. The daily time frame isn't too dissimilar from Bitcoin. Between impulsive legs sounds like a porn movie. I suppose so. There was a... So again, this is what makes market structure kind of tricky, and you have to make sure you're speaking... It's like time frames, right? Someone can say they're bullish and someone can say they're bearish. Maybe they agree over a given time span, but it depends on the reference points and on their frame of reference, right? So for example, if you're looking at the really big market structure swings, nothing's really changed, right? So you have a high in this area, a low, you have a higher high, and then as long as this low isn't broken, then market structure's bullish, right? And if anything, this looks like a lower low now, given we've got a swing low structure with a low with a higher low on either side of it, both here and here as well, right? So high, low, higher high, higher low. This looks like a dick, whatever. That's great. At the same time, and on the same chart, and even on the same time frame, if we look at more recent price action, there was a break in market structure, right? Specifically, we have this low formed, and then a lower low made on this sell-off, both on a kind of wick basis, but also on a closing basis. So it always depends on your frame of reference and your context. So you can have a shorter time frame or shorter term break in market structure within a kind of macro uptrend. And this is something I have to labor through to explain in reasonably clear terms in the video. But one mistake that I made when I just started trying to understand kind of reading a candlestick chart, and I was being taught trend lines and trying to just understand how they work, I always thought there was just like one trend line for the chart. So I'd look at a chart and I'm like, okay, where is the trend line? I just tried to go from the start to the finish and find like one line, not realizing that the price history is made up of like several uptrend lines being broken, downtrend lines being broken, triangles, etc. There's never like just one thing going on. It always depends on what's significant, how much significance you give to recency, and all this other shit, right? So if that didn't make any sense, probably didn't. I'll try my best to explain it in the video. Back to the analysis side of things. Instead of looking too much at market structure, despite there being a short-term break, I'm just happy to treat this as a range using recent price action, because you kind of arrive at the same conclusions as we alluded to previously. You've got lowest close and you've got highest close. 567, 601. And again, I think the reason I'll put 601 in blue is because it suits, potentially, if price plays out in the appropriate manner, that pattern we talked about in diagram form, right? As we talked about 20 minutes ago or so, you've got a low, you've got the high, you've got the lower low, right? And then you've got the rally, which breaks the high, which led to the lower low, right? And then you expect support at this type of structure. Low, high, lower low. Okay, if the market's bearish, it should put in a higher high. Oh shit, higher high. That's a sign of reversal, and at that point, we look to be buyers of dips at the high, which broke market structure in the first place, right? Same diagram. If we apply that to present circumstances, again, it's kind of messy, because we've got the top of the range close to 620, but still, I think recency kind of rules here. Using that blue level, you had this upswing, you had lower low, so for a bullish case, I want to see something like this. Break above the high, which led to the lower low, and that would also be confluent with a range breakout in terms of more recent structure, and then at that point, it's like the third or fourth test of resistance, etc., etc., that would look like a decent, not 100%, it depends how it looks, and again, ETH just generally isn't as clear as Bitcoin to me, but purely based on working with what we've got, which is something you have to do a lot of the time, this would be reasonably clear for me for some sort of send higher. But for now, for the shorter term trading point of view, I've kind of got a range-based support resistance-based point of view of 567 reclaimed support, 601 resistance, and that's kind of it for the time being. Does this diagram applied to this chart make sense or no? I don't use VPVR to find relevant levels, but I don't think there's anything wrong with using it to find those levels either. I suppose the summary version is this. Failure to set a lower high after a lower low is positive sign bull reverse. Failure to set a higher low after a higher high is a negative sign bearish reversal. There. I don't know if sometimes people screenshot stuff and it helps them to remember. I suppose this is the one-line version of what I'll try to explain in my market structure video. And again, whether it's an engulfed supply-demand zone, range, deviation, support resistance, flip, breaker, ICT, rectangle, whatever, ultimately it doesn't matter. We're looking at highs and lows, their relative significance and how price behaves around them, right? And it all kind of comes down to market structure, at least for these types of patterns, okay? So yeah, I'd be lying if I said I had anything more for ETH beyond these levels. Again, from a high time frame point of view, kind of locked out in terms of where we are now. I can even hide these from the weekly because they don't have any weekly significance, these levels that we're talking about. So just generally for my framework, in the absence of compelling high time frame structure, I'll still trade, obviously, if it's clear enough. But it'll almost exclusively be based on either really intraday stuff or at least recent levels of daily market structure. You what, mate? Blop, blop. I don't think there's anything else on intraday stuff that's particularly sexy. Yeah. Dana Wolf says, I really like the fact you mentioned several common trading terms and mentioned that they are just market structure and basically all the same stuff. Yes, focus on the how rather than the specific nomenclature. Nomenclature? I don't know, English is hard. Hold on. Nomenclature. Nomenclature, that's bullshit.
Nomenclature.
Okay, I've never said that way in my life. The devising or choosing of names for things, especially in a science or other discipline. So, yeah, forget
Nomenclature.
And focus on the method and recognition and actionability, etc., etc. Yeah, isn't that crap? Nomenclature. I swear that's made up. Yeah, okay. ETH BTC, I don't think it's changed very much. I mean, oh gosh, it's just literally gone sideways. So there was arguably the bearish retest of this high time frame range type of thing coming into 34s here. But it's done nothing since then, right? You had the retest, you even had the overthrow, which tested the higher level, retest of structure, but since then, it's just held support. Typically, from a trade management point of view, I have a conservative sort of exit signal if I sell a level and then it fails to break trouble area. So this is kind of less specific to ETH BTC, but generally, say for example, like red level is the level that I'm selling, and I'm targeting obviously a bigger swing. So this is weekly resistance. Let's say I'm targeting this weekly level here. So the trade idea is from A to B. If the market does something like this, but reacts nicely to the level, but literally holds the nearest level of support and can't even break a lower time frame level or market structure, etc., that's typically a good trade management signal for me to get the fuck out, at the very least to expect a retest of structure, if not just some sort of higher low before reversing higher. So the way a lot of my trades work out, if my swing basis or the higher time frame picture is correct, then price should really be doing a lot of steamrolling between A and B or B to A, depending on how I'm trading, right? If it gets stuck at like an interim trouble area, that in itself is a kind of, hey man, maybe reconsider. You're either wrong or you're early a lot of the time. Now, yes, it does fake out and you close early, etc. But this is all in the trade management video on my channel. I just thought it's perhaps relevant given how this thing looks at the moment. Link, I think the duck closed his link short, right? For us on the weekly time frame, this is kind of where these levels come from. I'm not going to have any strong views until we either arrive at a level or ideally break one. So we have the weekly cluster at around 15, 16. Retested resistance, and kind of similar to ETH BTC, hasn't really done much since then. Pulled back to pretty, like, as close support as you can pretty much map for this thing, and hasn't really done anything since then. That's high time frame resistance, and high time frame support is back at 7 to 8, if not the macro pullback. Oh my god, link at $4.50. So this is kind of the range, A to B. And it's more or less in the middle of nowhere. I may develop stronger views if we reach these boundaries, either on a long-term, for short-term trading and potentially long-term trading, depending on how these candles close. But for now, there's really not much here for me. Yeah, and you can see that on the daily time frame. There's some lower time frame opportunities, sure, but for the purposes of this live stream, at least, not a whole lot that's relevant. And you know, we've been chopped up on this previously by paying attention to this cluster on the daily as opposed to weekly structure, and that didn't lead to anything productive. So that's that. Yeah. And on the BTC pair, look. Nothing, again, moving down, right? Because this was a really good range, which broke down this cluster, and its underside got retested. But this doesn't exactly inspire confidence on the bearish side with regard to momentum. Just a lot of wicks below previous week's low. No real kind of, oh my god, high time frame breakdown, dump candle sort of thing. Just kind of sort of bleeding down, and no real impulsiveness on the Bitcoin pair either. So yeah, that's that. Nothing to write home about. YFI USD still doing YFI USD things. The general idea remains that now that the range low has been reclaimed, a reasonable target is the range high, kind of the boundary to boundary play. It made a higher high and then kind of got stuck just like Bitcoin did. And more recently, just a few days ago, retested the range low again. That should be enough to, if this thing's bullish, to take it to its kind of natural conclusion, if you will. The only short-term trouble area I see is just this mini shelf. Where does this land? At around... Where is that? 26, 27k. So macro idea, I think, still remains, as long as A remains intact, move towards B, right? This type of pattern. In terms of a momentum continuation or FTA break type of thing, this is sort of what I'd expect and what would be reasonable. If you want to be more conservative with it, again, you can always find the market structure setup in these sorts of cases, where we look at the lowest close and the highest close which preceded a break of support or a lower low relative to more recent price action. So if the upper boundary breaks, there may be a punt there from A to B, if not higher. Again, it's always a kind of... There's always a trade-off, right? If you get on board the shorter-term support resistance flip, something like this, there's more to capture between the flip and the first trouble area. If you're more conservative and wait for the range high to break, you've got more probability of being right, but less room to capture than if you'd entered on the support resistance flip, right? That's how it works a lot of the time. And Wi-Fi BTC hasn't done shit. As for the DeFi blue chips, I had a look before the stream. Some of them not look... I mean, some are just a lot more clear than others. Uni hasn't really done much. I still think the sticking point... We'll look at Sushi. I still think the sticking point remains at $4. 3.9 is the level, but I mean, $4, psychological, whatever. Now that it's had its high time frame fake out, again, doesn't work as compellingly for newer stuff necessarily, but generally it shouldn't be faking out twice, right? So you had resistance, fake out, resistance, dump. Why is there... Okay, never mind. If it gets back above the level, as you know, I generally don't believe, and don't believe. It's not a question of faith or religion or anything. I don't trade double fake outs. For me, if price gets back above a level which has been previously faked out, it's much more likely to be continuation rather than a double fake out, right? So I still think through $4, just in a similar way to Uni. YFI, there may be a kind of range low reclaim to range high play from A to B, but it needs to break this level first. Until then, in a pretty similar situation, I'd still prefer momentum continuation for this, and there's plenty of space to capture, I think, even with not an amazing entry, should this set up as discussed. Aave, this looks good, I think. We talked about the 79.7 level here, based off this highest close. And something we know from previous levels as well, that this instrument doesn't like to make it easy to get on board these levels, right? You had this deep pullback on the Bitcoin Thanksgiving dump, closed above it, reached first trouble area. Seeing similar behavior from this old high, from a kind of support resistance point of view, whereby you had the easy trade at the level itself, breaks down, and now back above it once again. So this should be the low if this thing's bullish. Looks like a reclaim, if you will, of 80 support. And, I mean, resistance-wise, I mean, technically this is your trouble area, but it's not really a level per se. Nothing really went on here. There's not much going on. I think as long as this low holds, I mean, really aggressively, it'd be thrust candle, but it's a bit close to the level. I think as long as the low holds, this thing's good to make a higher high. But to be completely honest with you, my reads on these haven't been too great, so take it with a bag of salt. But yeah, from purely kind of price, support, resistance point of view, whatever, sort of reminiscent of this. Good level, closes below it, doesn't do dick, and the reclaim sends higher. It looks, I think, comparable to that. No strong views on SNX and on Band either. Kind of just moving sideways, chopping. Not a whole lot going on. Sushi is an interesting one. It's kind of at resistance, but again, it's not the best resistance structure in the world. This is kind of the only technical reference point we have. We had it previously based on the lows, but I just kind of boxed out the whole thing as the consolidation pre, lower low, etc., etc. And that's kind of where it is now, which lands at around 2.4 more or less, right? From a pullback to support point of view, it came close a couple times to the 177 level. As you can obviously tell, you don't need me to narrate that for you. But it missed. I still think it's valid, especially if it sets up in a... not a uni. What the fuck was that pair? In an Aave sort of way, whereby you have a nice level at 177s. You have a low made which didn't test the level. If we have a similar type of pattern where we get the extension through support and then the bearish retest which does fuck all, a bearish retest which does fuck all and closes back above the level to define risk, I think that would look really good. Where it is right now, I mean, technical resistance, and yeah, this is kind of where you get chopped, and you can just tell from lower time frame price actions kind of moving sideways. Oh my god, kind of moving sideways as a whole. I still think high time frame support is down here, and I'd really love to see an Aave type of pattern where it closes below it, looks like a piece of shit, and then gets back above to define the risk for us. And then I think that's where the that would be a setup that I'd be more comfortable taking. But up here, I'm kind of more ambivalent, purely based on technical stuff. Just no strong read up here. Stronger read at support if it wants to get there. Dobry wieczór. Curve, kind of lost interest. I know there's some fundamental emissions, whatever stuff that someone kindly DM'd me about. If this changes and becomes interesting, I'll let you know. But for now, nothing too actionable with where it is. I still think that the proven level, I had some hope in 65s to form this type of, you know, market structure break, comes back, fakes the level, then acts as support and leads higher. Now it's closed below it again, and yeah, it's just chop and not very nice overall. I think we have to look higher to levels which have actually done something. Perhaps more reliable. Previous support turned resistance on one, arguably two instances. I think there's likely a momentum continuation set up through there, and then nice bases to target on the way up. But where it is right now, yeah, again, not clear. Had this held as support, I would have had a stronger view, but it just kind of looks choppy for now. This is one of those where I think I need it to go higher to take an interest, and there's no real structure down here where I'm thinking, okay, a higher low dip like here would be amazing, because nothing really jumps out at me, to be completely frank. Rune hasn't done much. Yeah, we'll look at XRP. Rune hasn't done much since the last session. We had this cluster, came wicked into it once, and that's kind of it. I mean, there's lower time frame support here at 78s. But yeah, I think generally this is our range, obviously, for the time being, between $1 and 0.77. If you are a degenerate low time frame, range to range, boundary to boundary trader for these DeFi alts, fantastic, be my guest. Hard to discuss on a weekly live stream, more so. I think for the time being, context, support, resistance, and then in terms of real dip opportunities, I think generally as long as this cluster holds upper boundary and or lower boundary, it looks fine to me. If back below this, it's probably a piece of shit, and I want nothing to do with it. But it's nice. It's kind of moving up in terms of its ranging environment, just making stuff up here, obviously. But yeah, I don't know what else I'm supposed to say. Support, resistance, right? Support, resistance, high time frame bias. Someone asked for... So a lot of these alts are ranging, right? That's the general theme we've seen. A lot of the impulsive moves, which is good, haven't been retraced or broken, you know, haven't gone to shit. It's not like a lot of the old altcoin Bitcoin pairs where you get one pump and then that's it. Ends up being a bearish retest and just goes to shit. For a lot of these, you had an impulsive move. It reclaimed something. I mean, some look better than others. And generally, the high time frame dip levels have held and formed a range, right? That's kind of the prevailing theme amongst a lot of these. And, I mean, RSR is no different. This is the Huobi pair, which someone told me to look at. Similar range. You've got support, upper boundary been tested, lower boundary hasn't, at 0.01, and then resistance at the breakdown cluster at 0.02. And these are our conditions. Okay, again, I know it's not exciting, but I mean, when the market's moving sideways and it's far away from the boundaries, I'm not here to make shit up. Or give you plans which are just unlikely to come true or are particularly far away from market. So that's our DeFi blue chips. We'll look at XRP BTC and XRP USD. So we wrote about this in Technical Roundup, which is our weekly newsletter. If you haven't subscribed to that yet, strongly recommend you do. Some good stuff coming there as well. Comes out every week, Tuesday at 8 p.m. UTC. So that's tomorrow pretty much in 24 hours. If you just want the levels and commentary, that's definitely for you. And we basically wrote how, with airdrops in crypto, nothing, look, it often turns into a predictable kind of hold for the airdrop and sell the news, but a lot of the time, perhaps the savvier participants who don't care about the airdrop will hold the anticipation of the airdrop and actually sell before the snapshot. Because once the snapshot happens, there's a kind of rush for the exit, so why not leave 5-10 minutes earlier type of thing, right? And that's... So the clock was ticking to basically not retrace a lot of this pump, and it's not looking great at the moment on the weekly and the daily timeframes, kind of roll over territory. What I will say is, in terms of weekly levels, I wouldn't be chasing this down into these lows, and the reason is more or less here, right? In a very similar type of fashion, you've seen this diagram, upswing, lower low, breaks it, plausible level of support, right? Same old thing. Low, high, lower low, should be a lower high somewhere, makes a higher high, and that high which preceded a lower low kind of turns to support with the additional context of these participants trapped to some extent, not necessarily, but whatever, like same old market structure pattern. No point making shit up, right? So that's the only kind of potential saving grace, at least on the Bitcoin pair. The other's upswing, big sell-off, engulfed, and now it's kind of reaching that point. So that's something to be aware of, although not looking amazing necessarily, just the weekly perspective to be cognizant of. For anyone more conservative, which would be totally reasonable given how it's looking right now, if that weekly structure, which kind of lands around here, you could plot it for yourself and see where the level ends up. If it's going to do its job, then this should have no difficulty getting above the daily breakdown level. So something like this, and then you could have some sort of risk-defined reversal pattern, or at least continuation of this pump to some sort of higher low, should it reclaim where it fell from. So if you're not weekly knife catching, that's fine. Waiting for strength is also reasonable, because a lot of the time, if you're not familiar, at least historically, XRP would just do, look, you can see it to some extent on here. You'd get a big pump. This is obviously very different in scale and what it changed in terms of market structure, but some of you will recall the XRP pattern on the USD pair as well as the Bitcoin pair, where you get a low period of volatility or period of low volatility, then a face ripping like week or two, and then it just gradually bleeds out, and then dip buying just doesn't work and it keeps going, right? It's one of those where if you don't catch the impulses, there's no continuation or clear market structure play to be had. So options, play the weekly bounce at the extreme of wherever that boundary ends up. You can plot it for yourself and see. Or daily continuation on a reclaim of the origin of the breakdown. If we just take the good old lowest close, highest close here, and treat it as a range, so aggressively back within the range, there's an A to B, and for high time frame continuation from B to, God knows where, C. Okay? Given that kind of bleed pattern, I generally try not to knife catch in cases like these, despite it being justifiable on the weekly time frame. I'd much rather miss out on the bottom and then get involved in a reversal pattern, which I'm much more comfortable trading, range reclaim, market structure, whatever, rather than, you know, a falling knife has no handle, blah, blah, blah type of deal. So yeah, that's just worth being aware of. And we'll look at the USD pair. Not too dissimilar, right? Yeah, I think we discussed previously that the better levels are closer to 30 cents, for me at least, without drawing like a line in the sand type of deal. If we just eyeball this old high here, which comes into this area, that's where real high time frame support is. We've got the added benefit of, again, that good old market structure pattern where we have an upswing, a lower low, acts as resistance initially and then broken, so, you know, all sorts of confluence, and psychologically as well, I'm sure, landing at around 30 cents. That's where high time frame support is on the dollar pair. So in a similar vein, that's the more comfortable level, and or using the same logic, a breakdown range reclaim would be worth our attention as well, right? If for example, this cluster holds or the Bitcoin pair bounces or something interesting happens here, then it should have no difficulty getting back above where it fell from. And again, the benefit of doing so is you get a risk-defined entry as opposed to a knife catch entry with God knows where in terms of stop placement. Another note about stop placement generally, whenever you get this type of, and this is purely anecdotal, observational, maybe there's market microstructure logic to it. I haven't really thought it through. There probably is. There almost certainly is, actually, but just to articulate the trading side of things, I try to avoid stop placement based on inefficiencies, right? So whenever you have like a really fast move up, and you can often see that in the footprint or market profile or whatever you use, I try to avoid using like those types of thrust candles for stops, etc. Because a lot of the time, if the market's going to retrace a lot of that move, there aren't going to be a lot of orders in the middle of that type of thin price structure. And accordingly, if you have a stop order in the market in a place that no one wants to do business, then the likelihood of being slipped and getting a much worse exit and therefore bigger loss than anticipated is significantly higher. So that's from a kind of trading point of view. It's another benefit of entering later if price sets up in that type of way, because you might feel safe with like a thrust candle stop from a purely technical point of view, but if it's an inefficient bit of price action, then your fills may not be where you expect them to be. And again, I just use this as an example. I don't think it's an amazing stop because, I mean, you're arguably stopping out into support, but that's a different matter entirely. A lot of these against Bitcoin haven't really done much else. I think Bybit also added BCH USDT, although that thing's been chopping for a minute now. Yeah, gosh, look at this. We did look at Link. The basic point about Link was we've got this weekly range. In the USD pair, it hasn't really done much, and it's away from our levels for the time being. And same for the BTC pair, broke down from the weekly range, but hasn't kind of done that much since then. Isn't XTZ... wasn't that looking a bit rough? We're looking against Bitcoin. Oh gosh, that really retraced a fair bit, didn't it? Ooh, what are you doing down here, boy? Oh dear. Yeah, this doesn't look interesting, is the kindest version of my analysis at the moment. XMR is one... XMR broke out, didn't it? Yeah, I mean, wow, I should have been on my radar probably, but yeah, this thing's going up. Amazing analysis, right? It's what we're here for. Yeah, what's it doing against Bitcoin, I wonder, or how that chart looks. Okay, yeah. Nice to see privacy coins sticking around. Did ZEC bounce as well in that case? If XMR is doing well? No, of course it didn't, because it's ZEC. Why am I even asking? Yeah. Yeah, nothing here that I'd want to discuss. I mean, Litecoin Bitcoin is just like a... Oh yeah, like the video if you haven't already. Or if you've learned a single thing or found a single thing useful, it'd be an awesome form of feedback from you to hit that like button, subscribe if you haven't already. And also, if you're just excited for the market structure video for this week, as well as the hedging video, be sure to express your support with a couple of very simple clicks. About Litecoin, I know... Did we look at the USD pair? I'm not sure. Yeah, so it's kind of good but choppy, right? Good but choppy. On the BTC pair, like, it's probably one of the more frustrating Bitcoin pairs in terms of how it behaves, because it gives you these market structure breaks which look decent and on their own develop quite positively, but then it just sizzles out into nothing. So for now, I mean, just looking at this, I'm not going to get terribly interested. I still think, look, from a weekly level to level point of view, if you want to give me an A to B type of setup where in a period where Litecoin's going to outperform Bitcoin, I think that makes a lot of sense. And, you know, the Bitcoin pair, we've discussed why it's still relevant, and especially if it's going to react so well to technicals, then I'm more than happy to pay attention to it. But just where it is right now doesn't warrant that type of interest necessarily. And even just looking at that from a level to level point of view, there's like, you know, 20 odd % there, not the worst thing in the world, but it just gets these impulsive candles which bleed down, or just nothing good recently in the past couple of months has come from Litecoin outperforming Bitcoin for very short periods of time. So I'm sure you'll forgive my skepticism to some extent. And just looking at a lot of these altcoin Bitcoin pairs have not had an easy time. Okay, I think that's all we've got time for today. Make sure, I hope the Bitcoin analysis is clear. If it isn't, feel free to ask in the chat. Happy to answer any questions. If I did a shit job of explaining something, I think we've covered a fair amount of ground. And of course, the newsletter also comes out tomorrow for those who want a slightly more up-to-date view, as well as, fingers crossed, the market structure educational video, which will be out on my channel, and then the hedging video, which will be out on this channel. So there's plenty to look forward to. Apologies for the delay in getting that to you, but it's just one of those things. Just one of those things. Thank you to Bybit for sponsoring Technical Roundup. If you'd like to join their Jingle Brawl, or if you want us to join the Jingle Brawl, make sure to leave a comment on the video and let us know that you find that interesting. If you want to support the show, make sure to visit the links in the description below. That's all I've got for this week. I will see you Tuesday on the newsletter. Hopefully this week you'll hear my voice a couple more times for the market structure and hedging video, and Casual Friday is next. Thank you very much. Hope you have a productive week. Hope you had a nice weekend. All that good stuff. Take care, and I will see you on the other side. Bye-bye.